Let's pivot a little bit and actually zoom out. I don't want to talk about an existential threat, but let's talk about Wall Street now getting involved in Bitcoin and crypto. And here's the thing, Michael, don't even try and deny it. Wall Street is known to manipulate markets. When they get long, they get loud. When they want a better price, they start propagating uncertainty. Now that Wall Street is in, and they're increasingly getting more in, do you think Bitcoin's price is being manipulated by big Wall Street whales?
I think when the price moves in random directions on Saturday night or Sunday morning or during the day, and when it moves in the opposite direction of the way that it ought to naturally move, I think there's someone with a lot of capital that's either panicked and they're doing something that I deem to be stupid or foolish, or I think there's someone with a lot of capital that has a different agenda than the rest of us, and we don't understand it, and that creates volatility. I don't think it's just Wall Street. I mean, the truth is, Bitcoin's just a free market. It's the freest market in capital in the world. And the definition of free market is anybody can manipulate it any way they want until they run out of money. So if you have $100 billion of Bitcoin and on Saturday night you want to sell all $100 billion of Bitcoin all the way down to one penny, maybe you can do it. And maybe you have an agenda to do it. I'll probably be buying it when it gets down to the one penny, maybe when it gets to the $1. I mean, if you want to call it manipulation, you can, but I wouldn't refer to manipulation as much as enable. It's enabling you to do it, right? Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60. It's always more volatile, but the reason it's more volatile is because if you had $1 billion and you were in Japan on Saturday night and you just had a panic attack and decided the world's going to plunge into chaos, and if you wanted to take a $10 billion or $100 billion short position on the economy, the only way you could do it was Bitcoin. But Bitcoin would give you not just the ability to short the market, it would give you the ability to short the market in 1 minute. It would give you the ability to short the market with 100x leverage or 50x leverage or 20x leverage. Okay. The truth is on Wall Street, normally you can't even short more than 2x. Like it's very difficult for people to get extreme leverage. I guess in the CME market, they get a bit more leverage in the future. So there they can bring more leverage. But I mean, Bitcoin is really providing everybody in the world with the greatest degree of liquidity and leverage and credit. And maybe you're a fool to short it, but maybe you're a fool to go long the other way. But the point is, that's what makes markets. Everybody's got their opinion, and you might think that you know better, but if somebody wants to panic sell $1 billion of Bitcoin on Saturday night because they heard that missiles got launched because they saw it on X from a stupid troll account, you know, your position is either you're not allowed to do it, I'm going to censor the transaction because you're just not allowed, and I'm the God King of capital markets. Or your position is you're free to do what you want. I think it's stupid of you. There's a phrase, a fool and his money are soon parted. If you're stupid enough to sell $1 billion based on a troll account because you saw a meme and there was no missile strike, or maybe there was, but it didn't matter, you're just going to lose the money. You won't have the money.
Picture this. A company that generated only $116.1 million in quarterly revenue now plans to conjure a staggering $42 billion to invest even deeper into Bitcoin waters. Yes, Michael Saylor, the brains behind this seemingly Herculean strategy, is leading the charge with confidence that could rival a Wall Street titan. The pitch? To leverage the infamous cryptocurrency, all tied together in what they are proudly calling the 21/21 plan. Before jumping to conclusions, let's dive deeper into why MicroStrategy is drawing this much attention and whether this plan is as promising as it sounds. Welcome back to Investocracy Crypto.
And what I would say about all this volatility and all this trading is the very intelligent capitalists that make the right trades are getting richer and more powerful and more influential. And the really stupid capitalists that make the wrong trades are getting poorer and they're getting less powerful, right? and they're becoming irrelevant. And the marketplace is much more complicated than you or I or any regulator or anybody on the face of the earth. And the real beauty, the insane beauty of the Bitcoin network is it is the world's greatest free market, maybe the greatest free market of anything. I mean, I wonder, is there any product in the world that is traded globally 24/7, 365 in multi-billion dollar components where everything is connected to everything all the time? I mean, I don't, you can't short Manhattan real estate. You can't short gold. You can't trade iPhones. Like you can't panic sell a billion iPhones on Saturday night because you think Apple's going under, and you can't, roaring kitty buy 10 million iPhones on Sunday morning. And so I don't know that there's another free market to buy and sell things with or without leverage at any point anywhere that's greater than Bitcoin. So I just think Wall Street is just one of the actors. But if they do stupid stuff, if they like manipulate, see, the thing is, you can manipulate the price of a stock at 4 p.m. in the evening, and knowing that no one's going to touch it until 9:30 the next day. You can't really do that with Bitcoin, because if you manipulate the price of the stock at 4 p.m., it's going to trade another 6 hours. So if you manipulated it down, you would be the loser, because people would be buying it cheap, in Japan and China and Europe while you're asleep. And then you're going to wake up and you're going to find that you're naked short and you've lost your shirt. So I think this is a game for adults. And maybe they short it and they buy it back. And maybe you don't like the fact that they shorted a billion in the morning and bought back a billion in the afternoon. But a free market person would say, hey, they created liquidity. And because they created liquidity, it trades 10x as much as it would otherwise trade. And because it trades 10x as much, that means that you can actually extract $1 billion in 5 minutes instead of $1 billion in 5 months. Right? It's like, you ever see a gyroscope? I'm spinning the gyroscope really fast, and you're like, well, wait a minute, it's not going anywhere. What's the point of spinning a gyro really fast if it doesn't move? I mean, because the answer is stability, right? It creates enormous stability. We use it in inertial navigation systems. And so all of this stuff going on in the market, which could be characterized by a hater or a skeptic as manipulation, it's capitalist trading with an agenda that's different than yours or mine based on their local knowledge. And they're creating liquidity. They're compressing the spread. They're creating credit. They're creating stability. They're actually diminishing the volatility, because they're going to short it at the top. They're going to cover their short at the bottom. They're creating a stable framework, and the inertial navigation systems matter. The gyros matter, right? All of these things have a physical value, right, in the economy. And I think anybody in business or anybody that studied life much, they realize that in a city or in an economy where lots of actors are able to go about their business doing things that you don't understand, that you wouldn't do, normally that maximizes productivity and quality of life, right? And if we only agree to do the things that you think make sense, well, every idea that you never thought of is never coming to you. And the truth of the matter is, you'd probably be dead, because there's probably 99,000 things that get done in this society that you can't do, that you wouldn't even think to start doing, that are going to save your life one day. And so I just think, let the free markets market. That's what they're meant to do. That's what makes the entire world work. That's what lifts humanity out of the gutter.
Michael Saylor's plan for MicroStrategy is the talk of the financial world. The question on everyone's lips is, can his 21-21 plan work, or is it simply too large to grasp? Though the figures are colossal, the rationale is simple yet audacious. Saylor envisions transforming the company into a massive Bitcoin leverage machine. But wait, this isn't merely a case of throwing money at the wall to see what sticks. MicroStrategy's bold approach of raising $2 billion through preferred stock offerings is ingenious yet precarious, hinting at a daring belief that Bitcoin's bullishness is all but guaranteed. The stakes are sky high, and Saylor stands at the center of it all, orchestrating a symphony of economic maneuverings. However, past volatility in the crypto world makes one question the wisdom in banking so heavily on Bitcoin's future performance.
Could you clearly explain how Bitcoin goes from 100K per coin today to 13 million per coin by 2045?
Well, we have to start with first principles. Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate or art or whatever it is. There's entropy, there's degradation. And so the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Even things we think that are scarce, like real estate, we can make more real estate. We make more waterfront property even. Half of Boston and half of Miami Beach is man-made waterfront property. So you start with that idea of scarcity. So why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And the supply of weak currencies is more like 14% a year. And that means the dollar loses 99.9% of its value over 100 years. A weak currency would lose, 99.9% of its value sometimes over 20 years. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. You ever go to Hershey's, Pennsylvania, you see a factory and they spit out candy bars and they spit out candy bars at 50,000 an hour in a box, and you can't create 50,000 candy bars, but they did it very well. That's why they created a company. So if a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. If technology or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, you don't want to store your monetary wealth in anything that human ingenuity or politics creates more of.
MicroStrategy's leverage has already powered an impressive 650% increase in its stock. But don't pop the champagne just yet. It's not all clear skies and rainbows. This surge exceeds even Bitcoin's impressive 180% rise. The shadow cast by their hefty $4.2 billion debt and the expansive gap between their market cap and the value of Bitcoin holdings should have potential investors cautiously curious. Furthermore, one must not overlook the creepy sound of alarm bells in the event of a BTC downturn. MicroStrategy's intricate dance with cryptocurrency banking rests heavily on the rising tide of BTC itself. If Bitcoin price volatility escalates, we could see a dramatic change in the stock's landscape. While optimism fuels this risky engine, skepticism remains about whether these ambitions can weather the storm if skies turn gray. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio, right? The thing that's going up a bit faster than the inflation rate is a diversified portfolio of high quality companies like Tesla and Apple and Google and the like. They can maybe outperform a couple of percent, due to human ingenuity and robots and AI and Moore's law, technology. But companies have attack surfaces. So companies have counterparty risk. The risk factors of companies are they might get sued for antitrust. China doesn't like Nvidia. Europe might tax Apple. A union might unionize Amazon. The US government might sue Microsoft, right? If it's a really good company, it's going to get a regulatory onslaught. And if it's a bad company, it's going to get crushed by a bigger company. And then maybe it just gets unlucky because of a war or famine or a hurricane or bad weather. Or maybe you're located in a city and the tax rate triples. And so there's a parade of horribles that cause you to lose money on a corporate investment or a financial investment. Or maybe you have the best company in the world and it happens to be in Venezuela and the government changes. Or, the people used to have really good companies in Cuba, and then Castro took over. And then all of a sudden it becomes illegal, or the currency collapses, or they expropriate your property. You have the best oil company in Venezuela, and then the government takes it. Okay. Or maybe you have a great company in Russia and the currency collapses like it did in 98. Or maybe you have a great company in Brazil and the currency collapses like it did about 30 years ago. And so things that are in the real world, things that are subject to political fate or weather or war or famine or competition, or maybe you have the world's greatest photo company like Kodak, oops, or Xerox, right? The world's full of examples of really great companies and maybe really great product. Maybe you have great land, maybe you own buildings, but the buildings were in Egypt and there's a coup. Or maybe the buildings were in downtown Afghanistan, in Kabul. Oops. Okay, so what is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency.
As MicroStrategy continues to challenge the parameters of traditional investing with its high-stakes crypto pursuit, potential investors are invited to consider whether or not to join this roller coaster ride. With a company stock that has vastly outperformed Bitcoin itself, it's compelling to think about its future. But remember, this pace is exhilarating, yet not without its own set of trials. Current trends suggest that investing in MSTR could yield exhilarating returns if fate is on your side. As this saga unfolds, it leaves many pondering their stance. Should one dare to invest amid such volatility? Or perhaps wait until Michael Saylor's gamble bears tangible fruit? And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.